Lockdown eases in Nigeria as citizens adjust to the new normal in businesses. Nigeria takes steps to ease the ERGP into Agenda 2050. Central Bank of Nigeria and Bankers Committee halt mass sacks by commercial banks in the country amid COVID-19 concerns. National Bureau of Statistics Poverty and Inequality report for 2019 shows 40% of Nigerians poor. This is the first edition of Business Express for the month of May. We are reaching you from Abuja, Nigeria's capital. I am Benny Adams. Taking steps to mitigate the impacts of the coronavirus pandemic on the nation's economy has led to the inauguration of a technical working group by the Ministry of Finance, Budget and National Planning to draft a framework for the microeconomic growth of the Nigeria Agenda 2050. The technical working group is tasked with evolving a framework for addressing key development challenges and the development of a roadmap to guide policy formulation, plan, implementation, and rigorous policy experimentation, among other things.
In carrying out this assignment, the team is expected to, among others, prepare a robust and broad-based macroeconomic framework to facilitate the development of the Nigerian Agenda 2050 and Medium-Term National Development Plan 2021 to 2025. Improve on the work of the technical staff of the ministry with necessary adjustments.
This new framework takes off from where the ERGP stops by the end of this year and is expected to guide the preparation of the 2021 budget. 40% of total population in Nigeria has been classified as poor. The 2019 Poverty and Inequality in Nigeria report, released by the National Bureau of Statistics (NBS), puts the number at 82.3 million people, and this is excluding Borno State. The breakdown shows urban poverty rate at 18.04% and rural poverty rate at 52.10%. Highest rate was recorded in Sokoto State, 87.73%, while the lowest rate was Lagos at 4.5%. In minimizing and mitigating the negative impact of the COVID-19 on families and livelihoods, no bank in Nigeria shall retrench or lay off any staff of any cadre, full-time and part-time. To give effect to the above measure, the express approval of the Central Bank of Nigeria shall be required in the event that it becomes absolutely necessary to lay off any such staff. This is the outcome of a special meeting of the Bankers Committee convened at the weekend to further review the implications of the COVID-19 on the Nigerian banking industry. Isaac Okorafor, Director Corporate Communications of the CBN, in a statement said the Apex Bank solicits the support of all in the collective effort to weather through the economic challenges occasioned by the COVID-19. Meanwhile, customers besiege banking premises with total disregard for social distancing. Banks, particularly in Lagos and Federal Capital Territory, who opened to skeletal services, are stipulated to guard against the spread of the coronavirus, had a hard time battling with a mammoth crowd bent on accessing the premises all at once.
My visit to the markets in the city to see how business activities are picking up was defeated as the markets are still locked down in compliance to contain the coronavirus pandemic. This, however, is not going down well with traders and buyers who have different opinions.
Before we left on Saturday, we asked some of them. They said that market will be open, but to our greatest surprise, we are here this morning. They didn't open the market. I don't know the reason why they didn't open the market.
Yes, we came here since morning around 8 because they told us that they are going to open the market today. We have been here since morning. Nobody here is yet. They told us that all of us should go back home. They are not going to open the market.
They still lock the market. They say we not go enter. Say no until on Wednesday.
As it stands, the one we've been saving, that's the one we've been eating now, and there's no income coming in, and so everybody's tired staying at home.
From what I'm seeing now, maybe 2 weeks' time, I believe things will normalize.
The situation at the Wuse market is the same thing. As you can see, the market is locked. Traders and buyers are seen outside stranded. Gaining access into the market has been so tedious, but eventually we have been allowed to go inside to find out the reason why the market is still closed. According to the management, markets in the city will continue to operate 2 times a week on Wednesdays and Saturdays until further directives from the authority.
The FCT administration, in its wisdom, has because they are the one that has the facts, they are the one that has the expertise advice, they have decided that markets in FCT shall continue to run on 2 days in a week, that is Wednesdays and Saturdays, while they focus attention now on the establishment of what we call neighborhood selling point that will take off pressure from markets such as this.
With the situation the way it is, residents are optimistic that things will normalize again and it will be business as usual after the coronavirus has been defeated.
Well, I have with me Bala Zaka. He is a business analyst. He joins us from Lagos to x-ray the issues around job security in the wake of COVID-19. You're welcome to the program, Mr. Zaka.
Thank you.
Okay, Mr. Zaka, amid growing concerns over job losses, how is coronavirus affecting jobs in Nigeria at present?
Jobs are going to be affected, whether one is in the rural area or in the urban area. Jobs will be affected, whether you're talking about private sector or public sector. Job will be affected, whether you're talking about the formal sector or informal sector. Jobs will be affected, whether you are talking about domestic centers, industrial centers, or commercial centers. I think it's unfortunate I will use the word a quake. There will be a quake in the general job industry because of what is happening to the general national economy.
How then would you describe job security in this prevailing circumstance?
Well, job security is a function of revenues or sales. In other words, for one to remain either in business or to be able to take care of those who provide services as jobs, that person, whether as government or as a public or private entity, must be able to create sales or revenues. And after creating the basic sales or revenues, you should be able to remove what we call cost of sales and revenues. By the time you remove that cost, then you will now look at other expenses before even getting to your profit before tax. And one of those is what we call salaries and wages. Considering what is happening, because revenues are not really coming in, revenues or sales are not really coming in, there is every likelihood that wages and salaries will be affected.
Okay, talking about wages and salaries being affected with the directive we also got from the central bank saying no bank should retrench or lay off any staff or any worker, whether permanent or temporal. We hear some other steps to mitigate this that they have also taken is to slash the wages, some almost by half. Is that the way to go? And if that's not the way to go, what else do you suggest can be done to keep jobs secured?
Well, the only way jobs can be secured is by making sure we create mobility of activities. And when we talk about creating mobilities of activities, there must be that flexibility such that activities can create and generate what we call sales or revenues. In the case of Nigeria, as we speak now, there is a flexibility in the lockdown, but we also have to be realistic. Even if there will be generation of sales or revenues, that will be at the level of probably the informal sector and probably artisans. And when we talk about artisans here, you're talking about probably mechanics, vulcanizers, tricycle riders. But unfortunately, they are not also going to generate any good revenues because they depend on skilled labors. And for skilled labors to generate revenues, there must be movement interstate, and there must be movement probably across nations, and there must be movement across the continents. A given example is this. Assuming there is an interstate movement, then you will expect skilled laborers to move from probably Lagos to Port Harcourt or to Abuja. When they fly in there, they will go and lodge in hotels. And that means hotels will generate revenues. When they lodge there, then cooks will work, others will work. When they land in Lagos, then they will board taxis into the city center of probably Abuja or Lagos. By the time they board, then they will pay the taxi drivers. Then the taxi driver will pay the vulcanizer. If you have skilled laborers moving across the country, then they will need to go to their dry cleaners and have their dresses washed or ironed. So it's also the same thing across the continent. And as long as these skilled laborers don't have flexibility to move interstate, intercontinent, and across the globe, then lower level cadre or artisans will not generate revenues.
Okay, thank you very much, Mr. Balazaka, which is to say we need to strike a balance for us to stay afloat in trying to, slow down the curve or bend the curve as it is. Well, this is Business Express reaching you from Abuja. The program continues after this break.
Let me assure Nigerians that all COVID-19 intervention funds are safe in the Treasury single account, and that government is still open to donations in this regard. Government has opened special accounts with 5 commercial banks which are directly linked to the Treasury single account. Donated funds are safe in the Central Bank of Nigeria. For verifiable information about the funds and other financial obligations of the federal government, please contact us directly at the Federal Ministry of Finance, Budget and National Planning.
It was yet another week of gains at the Nigerian stock market. Amina Nujem reports that the 4-day trading week, which was the last for April 2020, ended bearish.
The market opened for 4 trading days last week as the federal government of Nigeria declared Friday, the 1st of May 2020, a public holiday to commemorate the 2020 Workers' Day celebration. Meanwhile, a total of 1.012 billion shares worth 9.892 billion naira were traded in 17,023 deals. The NSE All-Share Index appreciated by 1.87%. to close the week at 23,021.01, while market capitalization stood at 11.997 trillion naira. All other indices finished higher with the exception of the NSE Miri Growth, NSE Consumer Goods and NSE Industrial Goods, which depreciated, while the NSE ASEM index closed flat. The financial services industry led the activity chart with 809.957 million shares, valued at 5.9 23.666 billion naira traded in 9,533 deals. This contributed 80.06% and 57.28% to the total equity turnover volume and value. The industrial goods industry followed with 47.884 million shares, valued at 1.681 billion naira in 1,920 deals. The third place was the conglomerates industry with a turnover of 46.627 million shares, worth 86.349 million naira in 550 deals. Trading in top three equities, namely FBN Holdings, United Bank for Africa PLC and Access Bank PLC, accounted for 414.588 million shares, worth 2.290 billion naira in 3,189 deals, contributing 40.98% and 23.15% to the total equity turnover volume and value. Exchange-traded products had a total of 200,104 units, valued at 2.264 million naira, traded in 12 deals. A total of 4,195 units of bonds were traded and valued at 4.890 million naira in 4 deals. In the price movement chart, 28 equities appreciated, 20 equities depreciated, while 115 equities remained unchanged. That's the stock market report.
Okay, thank you very much, Amina. What is the impact of COVID-19 on tax in Nigeria? Michael Ango, Associate Director, Tax Advisory and Regulatory Services, Anderson Tax LP, joins us to give answers to that question. You are welcome to Business Express, Mr. Ango.
Thank you for welcoming me.
Globally, tax authorities are experiencing a decline in revenue collection. What is the Nigerian situation and its implication for our national economy as well as the 2020 budget?
Well, I said what will determine how you are impacted in terms of your tax collection, it depends on your tax book. So for an economy like Nigeria, we have two good sources of taxes. We have oil taxes and non-oil taxes. Oil taxes essentially are the petroleum profit tax that we collect from oil and gas producing companies. And then non-oil taxes are, of course, things like the company income tax, value-added tax, stamp duty, technology levies, tertiary education trust taxes, and all of that. So in terms of the petroleum profit tax, given the significant reduction in global oil prices from, what we had budgeted, the budget benchmark of about $57 per barrel, today our body light is selling for just about $16. We will certainly see a significant drop in our oil tax collection. For the other taxes, again, the impact of COVID-19 will depend on, how the economy reacts to it. So what we've seen is that for economies, for example, like the US, China, and some of the European countries that had, lockdown in the economy starting from January, February, they have already begun to see the impact of the slowdown in economic activities. But in Nigeria, we had our lockdown essentially from March, so we are yet to see how this will impact us in terms of our tax collection. Interestingly, for the first quarter of 2020, the tax collection results from FIRS were quite impressive in the sense that we had a tax collection of about 1.2 trillion, which was one of the highest that we collected in the first quarter of the year.
Okay, while we wait to see what happens, agreed, the crash in oil prices has affected tax collection. The COVID-19 pandemic is another issue. With all of that affecting revenue collection, where else should government look out for to ensure that this tax collection or revenue is being scaled up?
Well, there are two ways to go about it.
Okay.
If you have a revenue shortfall, one way to go about it is to try and see if you can increase what you are collecting, i.e. increase the size of the pie that you are baking. The other way to go about it is to increase the number of persons who are eating the pie. In this regard, reduce what you are spending out of your revenue. And I think in that sense, government has already begun to look at how it can shrink, the cost of running governance. And so we've already heard last week that the president has approved the implementation of the Steve Oyosoye, committee which had recommended for reduction in number of government agencies and essentially trying to prune down the size of government. So that's one way to go about it. Of course, the second way to go about it is to say, look, what are those areas of our economy that are not significantly impacted by COVID-19? And let us see if we can maximize those areas of our economy. But let us bear in mind that these things do not happen overnight. So, getting revenue is not something like a tap that you turn on and turn off. It is dependent on what has already been put in place. But again, there are areas in the Nigerian economy where we can look at. So we believe that during the lockdown, for example, digital transactions, online transactions have, received a boost. People who stayed at home and they probably had to use more of their data, their mobile phones. So again, we'll look at things like telecoms. People have had to consume, a lot of food, staying indoors and all of that. So these are a few areas, agriculture and all of that. But like I said, it's not something that you just go and like a light switch, you turn it on and turn it off. What will happen is that, government needs to then say to itself that in the short term, what are these areas that we can look at and use them as a buffer? One thing also that government has had to do is borrow externally. So again, that is another area that government can use. But all these are buffers. They will not solve the problem conclusively. What will solve the problem is that we need to ensure that post-COVID-19, we can attract investment into the Nigerian economy, both local and foreign investment. We'll look at our interest rate. Then we'll look at how we can improve our infrastructure so that business activities can go on. And of course, if people earn profits from what they are doing, they will pay taxes to government.
Okay, Mr. Michael Ango, we can't take more than this for now. Mr. Michael Ango, Associate Director, Tax Advisory and Regulatory Services, Anderson Tax LP. It's been a pleasure sharing your thoughts with us. We'll get to talk about this as events unfold. Thank you so very much.
Thank you very much.
You're welcome. Moving on, let's take a look at business at the stock market. It is a green start again this week on the Nigerian Stock Exchange as investors recorded gains. The NSE All-Share Index appreciated by 0.30% to close at 23,889.86 with market capitalization at a little over 12 trillion naira. Guarantee, FBNH and UBA were the toast of investors. Resumed trade tensions between the USA and China have weighed down global stocks. Muplang Dakok has an update of performances across the globe.
Stocks ended mixed last week as investors across the globe weighed developments in the fight against coronavirus pandemic. The GSE Composite Index of Ghana, Namibia's overall index and Tunisia's Tun Index appreciated, while South Africa's JSE Africa Top 40 and Kenya's Nairobi All-Share Index ended last week in red. Stocks began trading on a negative footing this week as traders weighed the reopening of the economy with brewing tensions between China and the US. Stocks in Asia closed negative on Monday as reigniting tensions between the US and China weighed on investor sentiments. Hong Kong's Hang Seng Index dropped 4.1% to close at 23,613.80, with shares of Shanghai Composite gaining 1.33% and Nikkei Index dropping 2.84%. European stocks followed the negative trend set by their Asian counterparts in early trade, while markets traded lower in reaction to the rising tensions. DAX, FTSE and CAC indices all pointed downwards. In the US, Dow Jones Industrial Average Futures opened on a decline of more than 200 points. S&P 500 and Nasdaq futures also indicated declines at the open as states across the US are letting non-essential businesses reopen and are easing stay-at-home orders in an effort to restart the economy.
On that note, let's take a trip to the currency markets to see how the Naira is faring alongside other major currencies. at this point, we can't take more from this edition of Business Express. We value your feedback, so keep the comments and observations, suggestions coming, and make sure to be informed that previous episodes are available in our YouTube on the NTA's channels. You can also communicate with us on Twitter, and the handle is at NTA News Now. Don't forget to use the hashtag, it's BizX. Remember to intermittently wash your hands under running water as we stay safe from coronavirus. Business Express returns on Wednesday. Keep thinking and doing business.